Hey, good evening, Map here. So on Thursday, Alibaba caught my attention. I have a position in there, and I got hit pretty hard. Not pretty hard, whatever. I have a defined spread. I have the 250, 240 put credit spread. Obviously, I went through it. It was down $35. It's out in February, so no worries. Down some on the trade. It's only at $1,000. It's a $10 wide spread, so it's $1,000, and we'll see what it does. I can always roll it out in time, but we still got a lot. I still got a lot of time on those contracts. But yeah, it was hit big. So maybe some of you guys don't have any positions in Alibaba, and with the IV picking up on that sell off, the IV's at 63 right now. The IV rank. So I don't know. Some people have smaller budgets. I mean, buying 100 shares of Alibaba, you're talking about a $22,000 investment. Let me look at their options out in February. So okay, so these guys, they have $5 wide spreads. So that would be the kind of spread you would look at. But this one, February 19th, 54 days. Yeah, they have earnings on the 11th, so that would be a binary event. Alibaba's pretty liquid, so you might be able to go to 40 days. They're still $5 wide. Yeah, so they are $5 wide strikes in Alibaba. Yep. Okay, so it is what it is. It's a $5 wide. So let's go to the curve, and there's a couple strategies you can do here. If you think Baba's gonna go back up, and you could do whatever strategy you want here because the IV ranks 63. So you can go vertical, sell, put, and this is if you think it's gonna go up. You can go out to, I would just go to February. I'm sorry, I passed it. February monthly. And you can go your strikes down to, let's see how much you can collect here. So the 210, 205, it's right here, collects you $1.77, has a 59% probability of profit. Your max profit is 177, and your max loss is 323. If you wanted to get a little bit further out, and this is, the options are closed right now, so I don't know how the bid asks are. I'm just going based on what's there now. It may change. Obviously, it'll change tomorrow with the movement of the stock and the option market open. Go down to 205, 200, and that gives you a 63% pop and $1.53. So you're risking 347 to make $1.53. If you go down to 200, you can get to $1.32 and risk 368. And this is a put credit spread. Now, if you think it's gonna go down further, and I don't really care what strategy you pick, that's the beauty of options. When they're expensive, you can get out there and as long as you do your probabilities right, don't matter where it's going. So sell, call. I mean, obviously you want to have some kind of bias and be a contrarian. Okay, so here's if you think it's going to continue to go down. Now, put credit spreads trade cheaper than call credit spreads. Remember that. Puts are usually always skewed higher because always to the downside, the movement is faster and it could be painful. So there's always more premiums than puts. So when you combine the put credit spread together, they're cheaper than call credit spreads. So you see, for example, here you can go 225, 230 call credit spread, and you're collecting $2.15 and risking 285, and you got a 59% pop. If you want to get a little bit further out, you can get to, you see, no, oh, they have $2.50 spreads here on this one. Oh, this, I'm sorry, I didn't change the date. I don't really like the weeklies. I like to give myself some time. All right, so here is 235, 240, 66 pop, probably a profit, and you collect $1.75. So if you were bearish and you think it's going to still go down, Alibaba, you could do this trade. Another trade that would be very, very, I think, good here would be an iron condor. Iron condors are very good when IV rank is over 50. So let's go to February here on the expiration, and you spread out the wings. Let's see how far we can get. Let's see if I can. There we go. So you can get a better illustration of this, how it looks. And spread out the wings. All right, so right here, you're at a 70% pop. You're selling the 175, 170 put credit spread combined with the call credit spread of 265, 270. 70% pop. You're only collecting, I would like to collect more. $1.15 is not enough for me. And your max loss is 385. So you could skew it a little bit if you wanted to. Or bring it, let's bring in the, so maybe a trade you could do here would be maybe this one. So this one has a 60% probability of profit, more or less. You're risking 335 to make 165 with a 60% probability of profit. You're saying a 185, 180 put credit spread, and then you're saying a call credit spread of 255, 260. Now this is an iron condor. So you want to be selling stuff in here. Alibaba's IV rank is 63. It went up big on that big sell-off. So I'm sure there'll be a lot of trading going on in Alibaba tomorrow. That's for sure. I've been seeing a lot of chat rooms. So those are some of the trades you can do in here. If you wanted to do something less than 500 because you're cash, you have a different budget, then I think you would have to go to the weeklies. Well, these are the weeklies. No, the weeklies are $5. They're $5 to the downside. To the upside, you could do $2.50. Yeah, that's what it is on the weekly. But I like to give myself at least, the sweet spot is 45 days. That's what the research shows. That is 45 days. So I hope this video was helpful on Alibaba. They went down because of monopoly rules in China, etc. And those are some of the trades I will put in there. I currently have the, if you want to see what I have the, let me clear this. Yes, clear this order. I right now have the, which I'm down on. I have the, what do I have? This and this. This is what I have right now in February. So I bring up the chart. This is what I have right now. Obviously it blew through my, so for example, this trade right here, if it doesn't go my way and maybe Alibaba comes back a little bit, I had collected about, I want to say I collected over $3.50 here. So what I would do in this trade is I will, as time passes by, if Alibaba starts coming back, what I will do is I will roll this out if I want to stay in the trade to the March cycle, and I'll do a video on it because I have that I have that position in my TD Ameritrade account. But I'll show you. I have a position in Alibaba right now. I don't think I'll add more risk because I have a $10 wide, and I'll show you how I'm gonna manage that trade in the next couple weeks. But I'm still in Alibaba, so I'm just giving you guys some ideas. If you don't have a trade in Alibaba, it might be a decent one on the board for it to revert to the mean. All right, guys, please like, share, subscribe, comment below. Help grow the channel. I'm up to 50 subscribers. Super happy. And I like to help and talk about trading all the time. Have a good night. See you in the next video.